Hi everyone, good day, afternoon or evening, depending on where you are. This is the Collateral Onboarding call number 34. My name is Juan, I'm the facilitator from the Sustainable Ecosystem Scaling Core Unit. And today we are joined by the team of Untangled and a bunch of people from the maker community. And yeah, they will be explaining what the project is about, their MIP6 application and anything related to that, and hopefully answer some questions. So yeah, Manri, if you want to take it away.
Sure, thanks Juan. Let me try to share my screen. Can everyone see it?
Looks good.
Yeah, okay.
Yes.
So thanks Juan and our maker team for organizing this collateral onboarding call for Untangled Finance, and welcome everyone who has joined us today. So this is team Untangled Finance. Presented with me today, there's Juan and team. I'll let them introduce themselves. So I am Man Ray. Prior to joining doing startups, I did financial due diligence, specializing in financial services and energy sectors in PwC. And then in M&A for National Grid, mainly focusing on renewable assets and energy transition. So Kwon, would you like to introduce yourself?
Great. So yeah, my name is Kwon Lei, and I also spent a long time within financial services, working for a professional services firm. So throughout that career has been working with many lenders, banks. Following that career, I actually spent 7 years working in Africa, helping Africa to grow more rice and other arable crops. So some people saying that I was yield farming, but it's actually just for rice. And in 2017, I teamed up with Man Ray and another of our co-founder to start up Binkabi, which is a supply chain finance and trading platform. And from that, we move on to start Untangled. So very happy to be here today.
Tim?
Yeah, hi, I'm Tim Davies. I'm a securitization banker by upbringing. I spent the first part of my career in Canada and New York doing securitization, and I was headhunted to join RBS Securitization, which I did in September 2007, which sort of officially put me in the wrong bank at the wrong time and the wrong product. But you know, subsequent to that, I went on to work for Lloyd's, and then I joined Demica, which some of you may or may not have heard of. It's basically a servicing provider or service provider to the securitization world that solved data problems. And all the, you know, one of the staple assets of securitization, as you probably know, is trade receivables. And you know, it can be quite lucrative, but it's also a relatively detailed process to finance. And what I discovered at Demica is that by applying technology, particularly with regards to something like, you know, blockchain-based assets, but also on existing digital platforms, that there's a sort of a real need to connect sort of the fin with the tech to be able to finance these things. And so Untangled got in touch with me. So I'm acting as an advisor and also helping with the structure and looking at asset investors, things like that.
Thanks very much, Tim and Kwon. So as Kwon mentioned, we've been working together in blockchain space and fintech space since 2017, bringing real-world assets to the blockchain. We first co-founded Binkabi, and it's a origination platform focusing on supply chain trading and supply chain. And this solution is being used by banks and asset originators in emerging markets. So coming from this experience, we realized that there is a need for these asset originators to be able to raise money to continue to lend to the economy. We then set up Untangled Finance, which is a digital securitization and asset finance platform to help asset originators to finance their book via DeFi. So this is Untangled finance page. So we've got a Untangled Digital Credit Fund. This is a Delaware series entity called Up Series LLC. And this fund is set up by Untangled Finance Limited, which is regulated by the UK Financial Conduct Authority. So we partner with Centrifuge to provide the infrastructure for us to interact with Maker and other digital asset investors. So Untangled Digital Credit Fund will issue drop and tin tokens via TinLake in exchange for DAI. With DAI, we'll then exchange US dollars and then investing in promissory notes from the asset originators. Each asset originator has its own SPV, so we call this an asset SPV. So this is a place where real-world assets are purchased and held. The promissory notes are backed up by the real-world assets like loans, invoices, inventories that our originators ultimately have with their borrowers. So once an asset is purchased at an SPV level, it will be tokenized into a non-fungible token on Untangled platform. So not only the investors can track performance of the promissory note on chain through TinLake, we're also providing a performance monitoring and reporting of the underlying assets that are backing up these notes. For this point, we'll elaborate shortly. In terms of the asset classes, Untangled Digital Credit Fund, we're focusing on three main asset classes: is trade and supply chain, SME loans, i.e. loans that are on the balance sheet of the SME, green assets, including wind farms, solar panels, and other renewable energy assets. So for the first application, the asset class we are focusing on is trade and supply chain finance. So these will be short-term working capital lending, which are mostly self-liquidating. Typically, these assets are of much lower risks compared to other types of asset classes. International Chamber of Commerce reported that there's a less than 0.5% of trade finance loans resulted in defaults. Within trade finance, supply chain finance, there's a huge funding gap of over $3 trillion at the moment, underpinning the real world economy. And this gap has been growing even larger because of the pandemic. Financing these assets means financing the real economy. So we're working with a number of asset originators around the world, and they have a deal pipeline of about $100 million within the next 12 to 18 months. For example, an exporter, for example, of garment products in Southeast Asia typically have about 60 to 90 days to wait until they get paid. We can help them to get paid quickly so that they can continue to ramp up the production and supply more. Now I would like to talk a bit about the benefit that we can bring to Maker and other senior note holders. For Maker, we can provide what we call an abstraction layer. So Maker governance doesn't need to deal with individual asset originator applications, therefore improving your turnaround time. What this means is that you can scale up your real-world adoption of DAI. We use proven institutionally recognized structures and methodologies within the trade and supply chain finance sector. Now, for senior note holders, the benefit is obviously diversification. Real-world assets, as we know, are not correlated to any of the crypto asset up and downs. Even within the real-world assets, there are diversification benefits we can bring to you because the investors are not exposed to one single originator, one geography, one borrower segment, and single one collateral type. In terms of safety, because we have the institutional grade management methodologies, but we also have what we call safety layers. These consist of, for example, the first layer would be credit insurance. For some of our originators we work with, they have already credit insured for the entire exposure, entire of their exposure. There's also a layer of a junior tranche, junior participation to provide further buffer. We have currently 10% team tranche, and we ask our asset originators to take majority of that team tranche so that they have skin in the game. Later on, we will open the more team tranche to outside investors in Centrifuge and in Untangled network. Last but not least, the over-collateralization layer. Now, the way that maker invest in job means that there is naturally a degree of over-collateralization. But in addition to that, we may also do it at the asset SPV level, depending on the records of the originators that we bring or we include in the pool. So ultimately, we also provide what we call alpha, a premium on the returns compared to equivalent investment. The other benefit what I would like to talk more about is the what we provide is an unprecedented level of transparency, including on-chain portfolio performance monitoring and tracking, reporting and reporting of triggering as well. We were one of the 6 fintech companies that was chosen to become to join the FCA first digital sandbox. We benefit a lot from the data to be able to train our models. These are the 4 main points which we think that we can bring to the transparency here. First of all, each of the real world assets, like the invoices and the loans, is tokenized into a non-fungible token. So the investor can track each of the promissory note back to the underlying real world asset on the blockchain. Our platform is integrated with asset originators in most cases via API. So then we'll be able to provide a daily update on the asset status and performance, and this such as repayment, any kind of delinquencies, or any kind of issues with the underlying exposure. The third one is it is integrated with Plate and other types of open banking APIs for the full visibility of the collection account. We think this is very important because ultimately cash will determine whether investor will recover their money. And if the collection is not up to a certain standard, there will be remedial actions such as reducing the level of origination up until the point that repayment is caught up. And our platform automatically tracks the covenants and reports when each of these triggers is breached. So what we can bring on the table is that our experience in working with these asset originators around the world, our deep experiences in asset classes that we're focusing on, how to serve the needs of, how to work with lending protocols and the understanding of DeFi, and then how to serve the needs of these protocols in terms of, let's say, the ability for them to be able to track the underlying performance of the assets. The layers we put in to protect the structure means that we will be able to bring real world assets to Maker and other lending protocols at scale and safely. So now I'll pass on to Kwon, who will present parts of our platform. You basically will be able to see as investors what exactly you can do and you can track on our platform.
Okay. So if you can switch to my presentation, you allow me to do so. Okay. Sure. You can see my screen, right?
Looks good.
Yes.
Okay. So as an investor, when they have gone through the onboarding process, then they will effectively go into to see what are the investment opportunities that are presented here, and they will go through the process where after they sign the subscription agreement, they will be able to invest. And our platform support both fiat but also crypto, such as DAI and USDC. Once they have invested, then they will be able to see their portfolios. So each of the sort of investment portfolio that they invest in different kind of currencies. So this is from a investor standpoint. what I would like to focus on this code is from a asset originator standpoint, especially the points that Manre has made in relation to bringing the unprecedented level of transparencies for the investors. So with the originators, once they, when they want to effectively raise funds on our platform, they will create a pool of assets where they can issue the promissory note to the issuer SPV, which is the Up Series LLC that Manre mentioned. Now, after that, they can then upload the asset or mint the individual asset as NFT tokens. So as an example here. So here you can see that there's sort of 24 asset was minted. And at the moment, 4 assets has been repaid. As you can see the status in here. And therefore 20 asset is still outstanding. And very quickly, the platform will basically calculate the major sort of indicators about these particular portfolios. The other thing is once they I did mention about the fact that they can actually link the bank account to the platform. So if I was to go to here, so this is where we actually do integration with Plate, where you can each of these asset originators and their pools can be linked to a bank account where we can basically track the collections of the underlying asset. And this is very, very important in terms of in terms of structured finance and securitization, because ultimately that will determine the quality of the portfolios and the ability for the investor to be able to collect to their investment. Now, at any point in time, the investor in the drop token on the TINLEG can actually go and look at the performance of the underlying portfolios. So here they can see a few charts. For example, the originations volume, so basically by vintage, the collection to date by vintage, and then the outstanding balances and when do we expect to receive them, and also the level of past due within the portfolios. Now, this information, as Manre mentioned, is updated on a daily basis to API connections with our asset originators. So we are not just, you know, do it manually or rely on asset originator to tell us, but actually it's a system API connections so that we can bring sort of the near sort of live performance tracking mechanism for the investors. Yeah. The other thing that we are able to do here is that when it comes to the actual the individual assets, we can actually set up triggers. So here is the ability to calculate different kind of financial calculations or ratios, and based on that, you can even set up triggers in terms of, you know, if, you know, certain covenant has been breached because it's, you know, the level of bad debt is more than 5%, for example, then you email the notifications to the email that has been documented in here. So by doing so, we'll be able to inform the relevant people of the performance of the portfolios very early on, when if there's anything that happened to the underlying quality of the assets. And finally, from the asset, from the investor standpoint, at any point in time, they can go in and see a overview of the portfolios. They can see what kind of asset the note has been issued, and they can track that on the blockchain. They can see the underlying portfolios, including the status of each individual assets, and then obviously the performance charts that is within each of the portfolios. So that is the very brief introduction to our platform. Obviously, there are more capabilities, but in the confine of time that we have today, we would like to focus on the monitoring and the tracking part, and happy to answer any questions that you have.
Nice. Thank you both, Manuel and Kwanle. The first question I have, if you managed to tokenize the assets yourselves, why did you go with centrifuge? And I'm not saying it's a bad thing, I'm just curious on why you chose that path.
Okay, so let me try to answer that question. So what we focus on is on the asset side, whereas the infrastructure that rely on centrifuge is the interaction with the investors, especially with lending protocols like Maker, because we recognize and value their contribution, their effort in this space in terms of bringing real asset to lending protocols. So we would like to partner with them in relation to the interface with the investors. But on the asset side and working with asset originators, that is still the part that we are focusing on. So if you think
also our strength.
Yeah. If you think of there's two parts, one is sort of interfacing with the investors, that's the part that we'll work with Centrifuge and TeamLake on, and the part that we, in this particular setup, we rely on inline in-house technology is the tokenization of the individual assets and tracking and structuring of the transactions.
Excellent. To kind of follow up there, I guess, you mentioned the partnership and the blockchain community being important to you. What else are you kind of hoping to get from the lending line with Maker? Like, are there goals that the credit kind of allows you to achieve? Or is it simply just kind of getting more integrations and working more with kind of the blockchain community?
Yeah, I think certainly Maker, we've been followed blockchain since 2017, and Maker is one of those, I would say, a very special protocol in the sense that in the way that you effectively allow issuers like yourself, ourselves, to be our own bank, so to speak. So we will be able to lock up the collateral and effectively draw down DAI, and that is, as far as we know, quite unique within the blockchain space. So we specifically target to work with Maker as the first applications. We do see increasingly there are other lending protocols out there, such as I'm sure those some of them you consider your competitors like ARF or Compound or some of the newer protocols, but they all basically have so to speak cost of fund. So here is the ability to be able to draw from Maker's DAI, even though, you know, at the moment the real world acceptance of DAI is still very, very limited. But we hope by working with the Maker that we can help you to achieve that real world adoption.
Hi, hopefully you can hear me.
Yeah.
Yeah, sorry, background noise. I'm outside. So can you go over the sufficient bolt that you spoke about earlier? I think it was you, the over collateralization. Like, if you could walk us through what happens if one of the borrowers defaults or worst case even goes bankrupt. Are you able to go over that? How do you regain your the loan, and if you could just go over that vault again that you spoke about, the sufficient vault, I think it's called.
Yeah. Okay. So do you want to go through, Maria? Do you have that page open?
Yeah, let me do it.
It's
I can't. And Juan, you are the presenter. I think you just.
Okay. So that's
Sorry.
fine. I can answer.
Fine.
So okay. So before any loss that ever hit Maker or senior note investors, then there are three layers of buffer beyond that. Now, first of all, it's for some of the credit for asset originators that we work with, we actually require them to have credit insurance. So certainly within this first pool, there's a asset originators coming from Europe, from Denmark. They have a product where each of the product is actually insured 100%. So that is kind of the first level of protection. And they have insurance policies with the likes of Euler Hermes or Allianz. So unless these big organization, AA rated organization goes down, then the probability of losing money on those transactions would be close to zero. Now that doesn't work for all asset originators, because really depending on the nature of the underlying assets and where they work, whether it's cross-border or within the same country. At the moment, the credit insurance market is actually going through some kind of change following, the event of green seals and so on in the UK and around the world. So some asset originators cannot sort of profitably able to buy the credit insurance. That is where the second layer is coming in, which is the TIN charge. That 10% that will basically be sort of hit first before the investor get hit. And then finally, of course, you have the over collateralization because of the way that the vault work, 105% towards 100% of DAI. And but even before we have to hit to that level, because of the ability to track this asset on an ongoing basis, that we'll be able to identify any early problems so that we can have remedial actions, such as what we said is the, basically limit our originations, require the asset originators to collect the assets before we actually disburse more funds. But also each of these individual assets are quite granular. So even, in the worst case scenario, if you lose one asset, let's say for $20,000-$30,000, then the impact on towards the whole portfolio would be quite minimal, and they've already been sort of buffered by the 3 risk layers that we provide.
And if I could just add to that, it's Tim. Actually the risk mitigation starts earlier than that when you're looking at historical data, when you're sizing the enhancement, the size of the enhancement or the over collateralization. Typically in the market, you would use the S&P trade receivable methodology. It's sort of the market standard. It's been around for 30 some odd years. Nobody's really lost money at doing it. And it basically looks at the various metrics of the assets, like delinquencies, defaults, dilutions, and aging. And then the enhancement is dynamic, so it adjusts. So to the extent that the collections or the servicer of the assets aren't collecting properly, the enhancement increases. And that works both ways. If they get better at collecting, it decreases and they get a better advance rate. So the structure itself of creating the over collateralization and the enhancement related to the assets anyway is sort of built to adjust to deteriorating performance until you hit a trigger, and then and then there's consequences for that, and those are wide and varied, obviously.
And that's implemented by a credit rating agency. So yeah, go ahead. Sorry.
Sorry, no. I mean, you could get rated, but generally, even people that banks that or anybody that invests in these assets, if they don't necessarily have to get them rated. It's a very expensive and painful process to get stuff rated. It's kind of like elective dental surgery. So if you didn't have to do it, why would you? If there are investors that require ratings to to invest, then that's obviously a possibility.
Got it. And circling back to the insurance part, is it also true that the borrower needs to get insurance for maritime insurance? So for example, if you're shipping something from Asia to Denmark, is that something that also plays into the borrower's thinking?
I think it really depends on when the exposure actually takes place. So some products has as soon as you shift, then you can basically borrow money. So the lender will effectively take the shipping risk as well as the payment risk from the ultimate buyer. And then but typically other products is only when the buyer has received the delivery and now basically have 60 days, 90 days to pay. So it really depends on products. And generally speaking, the maritime insurance is pretty standard in this sort of thing, and there's a lot of providers out there. So the insurance that we focus on here is credit insurance. That is a little bit more special because obviously it deals with the actual non-payment of the obligor.
Understood. Thank you for your patience and your answers. Appreciate it.
I have a question about like the centrifuge pools. Are you intending to use the like incentivized ones? Like, will there be kind of farming rewards for drop investors?
Yeah, I think that's the part that we still need to sort of agree with centrifuge. We are aware that they do have some kind of incentive for the investors. What we even before, hopefully we can get one of the vault open with you, we'll have a live pool up and running with their own investor community. So that would very much depending on how they would like to incentivize their own investor community. So I think that will be part of that equation.
And also, I guess I had a question in terms of like scale, like in an ideal world, how much financing would you be seeking from the maker side?
So we look to apply for initial debt ceiling of between 5 to 10 million. So it really depends on when you actually go around and do the DD and how you can actually sort of accommodate that. But as Manuel mentioned, here we are not working with just one originators, but we work with, we already have 3 signed up, and we continuously have more people wanting to join the fund. So we very much aim on having this portfolio to 200 million within the next 12 to 18 months.
For this trade finance pool, but then we're also looking to have other pools like SME loans as well as green assets.
And I think as Manuel mentioned, there's a huge gap within the trade finance market because banks, because of the requirements for regulated capital, has largely pulled out from trade financing, where actually this is actually the financing of the engine of growth for the world economy, especially after the pandemic. So actually, because of the pandemic, that the financing gap has increased from something like 1.5 trillion to over $3 trillion. And so we anticipate a huge demand coming through. So I think on the demand side, we won't have any issues in terms of, in fact, we will be able to pick and choose the right asset to bring to the protocol.
That's right.
Can I ask a question? You are registered in the UK, is that correct?
That's right. Untangled Finance Limited is registered in the UK, but we set up our digital credit fund in Delaware. In Delaware, okay. But your business focus, is that in any specific region, or is it completely global? We're mainly focusing on UK and Europe. However, with the nature of trade finance, it is very global. It is very global in the first place. Therefore, for trade finance, there's a lot of overseas originators that approach us, and therefore we expanded our focus overseas. But it's also linked with our previous experience with Binkabi, which is an emerging market focused financing solution for the supply chain. So we have a lot of experience on that. All right. But if you are operating globally, you have exposure to other assets or other currencies than the US dollar, correct?
Yeah, that's right. So at the moment, if I may answer that, so two asset originators that we work with. One of them is based in Denmark, as I mentioned. The other one is based in the Middle East, UAE. So they use AED within the Dubai Emirates. AED is pegged to US dollars. So we try to manage the currency risk either by sort of overlaying that to the asset originator, so we lend them in US dollars, or to the currencies that has, let's say, less volatility because they are pegged in the case of AED in the Middle East. But certainly, if it was Euro, then that market for hedging is very liquid.
All right. Okay. Thank you. Then my next question has to do with what kind of rules and regulations you follow. Because if you are engaged in global trade, there are a number of countries that are not so popular. Let's take Iran. You need to follow some kind of national state regulatory regime with regards to this. And you follow the UK one since you're based there?
Yeah, I think this come part of our due diligence, which is we take it very, very seriously. We typically do all sort of checking, independent checking in terms of the not just the asset originators, but also the founders of those asset originators. Because we are not decentralized, so to speak, so we can actually choose to work with the people that fit with our objectives. So right now, specifically speaking, we got 2 UK-based asset originators who originate assets cross-border, but they themselves would also have to be in compliance with those jurisdiction. And the other asset originators like the Denmark and UAE, they originate within their own market. So much less of a risk that they are dealing with North Korea or Iran. Nothing wrong with those countries.
Just on the regulatory point, in most jurisdictions, the financing of receivables is not a regulated activity. And so, there are some places like France and Italy, for example, where that's not true. So there's no risk that Untangled will be viewed as a lender in the bank sense of the word. And then the investors obviously will have their own KYC, AML, and sanctions requirements, and those typically follow the OECD and the blacklists and the PEPs. We'll have access to the same database that most financial institutions will have in terms of bottoming out exactly who we're dealing with.
All right, thank you. I have one last question, and that has to do with your cost structure. If you, let's say you have a part of your cost structure has to do with capital expenditure, and part of it has to do with human resources. And if you are planning to scale as much as you're hoping to do, what approximate is the share of human resources in your expenditure picture?
So when you say expenditure, you mean for us to operate the platform and
your overall cost structure?
Yeah.
Just your overall cost structure.
Are you talking as Untangled Finance as a company?
Yes.
Okay, so I think one of the perhaps we've been a long time in startups, and you know how startup works. We basically have to sort of make ends meet and basically have the to make our resources go as far as possible. So in terms of the actual costs, the major cost for us is obviously the development team costs. That is one of the major costs for us. We actually have a development team who is based in Vietnam, so where I'm from originally. And the cost base there is a lot cheaper compared to, let's say, if we have the team in the US or the UK or Europe. So that is one of the factors. The other thing is within ourselves, between myself, team, and Man Ray, we have been a long time within the financial services industry, especially doing due diligence towards many of these organizations before. So a lot of this thing we can do come from our experience, but the ability for us to be able to convert that into systems like automate that process will also help to bring down our cost base. So actually our cost base is not as substantial as some of the maybe other competitors.
Sorry, and just to clarify the question, were you looking for a point in time reference, like what percentage of the budget is people versus capital expenditure?
Yeah, like just to take last month.
Can I just clarify the reason for asking this question? Because this is obviously not quite correlated, not quite related to the to our application for on this, because the fees that we charge is I see this as two parts, right? This is our business is to raise finance for our originators, and now it's by Maker Protocol. We ourselves as Untangled Finance as a business, but you are investing in the in our originators in the pool that we created with centrifuge to Maker investors. But for our companies, we have our own company investor that will finance our growth and ourselves. So I don't quite understand the background to this question. What are you trying to get? So that will help us to better understand and answer your question.
Yes, it's not a yes or no or something that is correct or incorrect or anything. It's just I was curious, so I asked. Yes.
We do a lot of things ourselves, and our team size is small, and we would like to maintain this small team size. So let's say 100 million. I think the when we are grow to 100 million pool size, we need to have some marketing people and a couple of origination people that share the responsibilities, as well as a couple of structuring people. But within this confined, within kind of 20 people team, we can do a lot of things. We don't we can go quite far.
Yeah. All right. Thank you.
But at the moment, we do have a small team, and we try to automate just even the Standard and Poor standard and the team mentioned about. We actually codified it onto our platform. So a lot of things have been automated. So the main tasks for us is actually BD and due diligence on our originator, which we do a very thorough job of.
Yeah. Speaking about the assets or that you provide finance to, I assume that in some cases you, let's say, not all deals go well. Sorry, the kids.
Right.
So I assume that let's say you provide finance for a shipment of bananas, and the deal doesn't go well, and then now you have a whole lot of fruit that you're not able to sell. It's just an example that I could think of. Because I assume that in not all cases are you able to monetize on the asset if you get your hands on it.
Should I attempt it first? And
I actually know a lot about bananas, so after you said,
okay, go for it then. First of all, this is Untangled Credit Fund is not an originator ourselves. So we basically, first of all, to pick and choose the right originators that we work with. And because we, through Binkabi platform, we are we've been originated before, so we kind of know, and we know supply chain very well, so we know how to pick the right the right originator to work with, and through due diligence, then we can find out a lot of issues that we can then put it in the right structure in place in that, so that these things that is unlikely to happen. And if ever it happened, Kwon, please.
No, I mean, yeah, the first thing about bananas is that, you know, it's actually a berry. So so it's the same family as strawberries or blackberries and things like that. So these days, because of the cross breeding, that you don't actually see the seed anymore. There used to be like 10,000 type of varieties of bananas, but these days most of us just eat the Cavendish bananas that's you know, created in the UK, because that has a consistent color and qualities, and it's good for transportation. Yeah, so that's the first thing about banana. But I think, like you said, you know, invariably these deals that our originator get in, some of them will you know, go not going according to plan. The asset originators that we are onboarding right now actually have never had a default before, but also understanding that they have, let's say, shorter operating history compared to, let's say, like a bank. So typically they are 2-3 years having origination history. So they still need to be, you know, going through the full credit cycle in order to work out. But at the end of the day, they will, you know, something will go bad, and that is where, you know, all the buffer layers will come in. But in the short run, of course, as we are able to track these assets on daily basis, that we can actually also exercise some kind of remedial actions. For example, we can stop them drawing from the bank account until they have collected to a certain standard.
All right, thank you. I have no further questions.
Thank you. I've seen a couple of questions coming from Paper Imperium. It's asking about how much of the receivable are secured by inventory and how much by revenue. So we've got 3 originators so far to include in the first pool. One of them is actually revenue based. They basically have an arrangement with Amazon and like Deliveroo equivalent in the Middle East, these kind of big platforms, and they would finance the merchants on the platforms. So again, the payment back of these loans are handled by these big platforms like Amazon. Will be paid as soon as the revenue arrived, then the debt will be paid back automatically. With another originator is the one that is in Denmark. This is, they finance is based on invoice, but it's not backed by invoice, in the sense that they are actually providing finance to the buyer, so to the invoice receiver rather than the invoice issuer. So the invoice receiver will be paying back for these debts. However, the entire exposure for the loan has been secured 100%. Therefore, it's very safe, and they have 0 default rates since inception. The third one is more on the supply chain, which Kwon you can elaborate.
Yeah, so yeah, there are also more kind of mundane sort of receivable finance where effectively they purchase the invoices coming from the suppliers and then to collect it directly from the buyers. So and between the, let's say, revenue base or invoice compared to, let's say, inventory, we tend not to get too much into the inventory side. When it comes to physical assets like, you know, bananas at seas and things like that, then there are other type of risks.
then you have to deal with depreciation and then loss. And yeah, we have a lot of experience on that on Binkabi side. Yeah, the loss of weight because
you have
rice have been stored in a warehouse for too long. Degrading in terms of quality. You have a lot of other risks to deal with.
Yeah. So in essence, tokenize a banana is harder than tokenizing an invoice, which is a claim.
And most investors in this type of asset class won't. They don't understand things like price risk or quality degradation due to transport or anything like that. What they're interested in is just literally the legal obligation to pay following the provision of goods or services, and that's the asset that we're working on.
We've got Brett.
I think Brett has a question.
Yeah, thank you. Well, thank you to all three of you for coming on presenting. This is a really fascinating business that you're getting into, and for Maker, I think this is a really interesting opportunity for us to partner with you. Could you talk a little bit about, you mentioned due diligence a couple times on these asset originators. Could you just talk a little bit more about the process for how you go about identifying asset originators to onboard, and then what your due diligence process is?
Sure. So the process we have is, first, you obviously have the initial discussions and see the viability of their business. And once you get into the DD process, and we basically do a kind of a full-blown DD that would have been carried out by by Big Four on a bigger scale kind of projects. So we first look at the legal structure. We look at all their financial statements and management accounts on the entity itself. So to see their see how viable and how have they been doing as a business. And then we drill down to the loan book itself and analyze all the delinquencies and repayment and all the KPIs and ratios. We look at their credit structure. So we actually go through all their existing agreements with their existing creditors to establish that whether any of their loan book are actually movable, whether there is a priority in, because one of the originators we rejected was, the issue with them was that one of their lenders requests that all future assets and existing assets is basically cannot be novated. And that obviously means that they can't set up an SPV and move the assets to the SPV for that to be financed. So we carry out all the background checks of the founder. We have a few calls with them on their experiences to find out whether they're capable enough. We talk to the accountants of the originators as well as lawyers to make sure that there is no ongoing litigation and there's no what happened with the past litigations. So yes, any and we search all the public record on these originators on desktop research, and we then provide a full DD report, which will be shared with Maker at the DD when it's the time for DD. And in the case for for example, if they say that they have a credit insurance, then we'll go through the credit insurance documentation. Sometimes you have different degrees of willingness to share from originator perspective, because from their perspective, a lot of them are their trade secrets. But we make sure that at least we are able to view the documentation kind of on a physical data room or online, so that we can document all our findings to make sure that our reputation is protected and ultimately our investors' interest is protected.
Yeah, and sorry, also don't forget that the repayment on the investment doesn't come from the originator; it comes from the underlying obligor. Yeah. And so the originator is only tangentially important to the recouping of the cost. And because the asset class is quite common, if you ever had to go out and hire a backup servicer, you could easily do that.
Yeah, but obviously we don't want to have that. So we also kind of look at originators' ability to originate. Yeah.
And also from my previous experience as earlier life spending on auditing bank is that cash is king. So you can track, for example, you can track the repayment back to the cash collection, because ultimately that's determined whether or not the investor get paid.
Thank you. Yeah, that's very helpful. And I think, Monroe, you mentioned that there was I think you mentioned there was a big four, like typically your due diligence will involve some independent service provider, like a big four, or did you not say that?
No, I didn't say that.
We come
okay,
from
I'm sorry. I
came
just
from Big
missed it.
Four.
Yeah.
So we can carry out due diligence to the level of Big Four. Our portfolio is still quite small, but as the size grow, we'll start to hire subcontract. Like we'll hire Big Four or kind of professional service providers. But yeah, these are the first few.
Absolutely. Thank you. I mean, your due diligence sounds very, very thorough. And that's interesting that you're also willing to share that report with Maker. I guess a little bit of a follow-up to that. Can you talk a little bit about how you, I mean, it sounds like you have a very thorough and robust underwriting process, and you're kind of underwriting all the risks. At the end of the day, there's some interest rate that gets output that the drop and that the drop creditors are receiving. Can you talk a little bit about how you go about the ultimate pricing of that coupon that the drop would pay?
I see. Okay. May I attempt that? And I think Tim has a lot of experience in this area. So, okay, throughout the due diligence and structuring process, we would be able to know what is the risk profile of underlying portfolios, and then that would determine what kind of credit enhancement that we need to have on that portfolio in order to get it to a level of, let's say, a BBB rated type of instrument, even though we are not engaging with a rating agencies. And then we will then look across to see, a typical BBB rated corporate bonds, how much yield is being afforded, is being paid. And then obviously we have to provide a level of premium for the likes of makers and other investors, because obviously we're still quite small and less well known. So there's a process to basically benchmark ourselves with sort of equivalent investments out there. And as we develop with you further, we have developed capabilities to even do Dutch auctions on the pricing, so that investor like yourself and other investor can actually, within a range, select the level of pricing that they're comfortable to sort of park their money away with. So that would provide that level of sort of market feedback in terms of what is the pricing level that the market is willing to pay vis-a-vis, other kind of equivalent investment.
And it's, if you look at the asset side of that equation, the originators that their access to alternative forms of capital, I would look at what their sort of next credible dollar of funding would be if they went down to the bank and asked for, another 10 million. What rate would that be at? Whereas with securitization, because you're basically doing ratings transformation, you can have an unrated or a junk unrated or sub-investment grade rated corporate that now all of a sudden has access to investment grade price debt, and so that delta between those two numbers is your pricing window. And my bond trader and I used to say, price it enough so they're angry, but not angry enough to do anything about it. That was that was our pricing methodology. But to be fair to these guys that are accessing the financing, what you really want is you just want to make it appealing to them, right? And you want them to take that number, but in the background that there's enough spread supporting the coupon on the note. There's more than enough spread, as a matter of fact, supporting the coupon on the note that you'll never be worried about coming up short on interest or replenishing reserves if you have them.
Yeah, thanks, Tim. Yeah, that makes sense. And that's a potentially fascinating like Dutch auction mechanism to get some more real-time market feedback, because it's been a little bit of I think an unanswered question on how to price these credits that Maker is lending to, especially because Maker doesn't necessarily have the expertise to be able to drill down into the underlying portfolios of loans. And so it's great to have the opportunity to partner with folks like you who do all of that diligence. I guess one other question, could you talk a little bit about the who you envision in co-investing alongside in the TIN tranche? Is that going to mostly be asset originators, or how does your Untangled credit fund and the capital of that fund kind of fit in?
For the first pool, we asked our asset originator to take majority of that TIN tranche, and we will start offering. We may be offering a small part of that TIN tranche to centrifuge community who are interested in this. But in the kind of as soon as we get it up and running, we're looking to once we gather enough kind of some track record, we're looking to open the TIN tranche to centrifuge community, to our own Untangled platform, and in some cases we also will participate in the TIN tranche.
Got it. Thank you. Yeah, I think that's all the questions I have. So these deals, it sounds like you will be co-investing with your own capital, and some you will not be.
For the first, Quan, please.
Yeah, it's not so much like we selectively. It's not like we selectively take on the risk and leave other investors to take most of the risk. It's not so much like that. With the asset originators that we work with, I mean, they are fast growing, but they're still quite small, and there are a lot of there's not a lot of avenues for them to raise capital. And if we are able to advance them at sort of 85-90% effectively, that is a very sort of good deal for them. But at the same time, because of their limited operating history, that we want them to effectively take more of the TIN tranche to make sure that they absolutely have the skin in the game to be able to deliver. So it's not so much that we pick and choose which risk to take and which risk to sort of offload to investor. It's more of how we work with the asset originators in their early days, and then later on, once we have built up that track record, that we'll be able to offer that to other type of investors.
And also keep in mind that by regulation in Europe and in the US, in most jurisdictions, that skin in the game tranche, the bottom, the equity effectively or first loss, has to be retained by the originator, and that's 5%, unless they change it.
So if
Okay,
if
yeah.
we if we can't invest, if we don't invest, it's more of a function of our let's say limited financial resources, as opposed to, oh, because we view the risk is too high for us. It's not like that.
Yeah,
In
correct.
fact, there are quite a lot of investors within the Centrifuge community has asked us to open the tin tranche to them.
Right, right. Okay, yeah, that's very helpful. It's always it's a, I think, an elegant design with the tin and drop that you know, as a creditor into drop, to see who is putting skin into the game, into the tin tranche. And you know, it sounds like asset originators in your case are going to be filling most of that role.
Initially. And I think from
initially.
yeah. And obviously from our standpoint, also the, you know, apart from maybe some expenses that will be very much clearly defined in operating agreement, we also effectively take our spread lower than the senior investor. So that is also effectively our skin in the game, as much as, you know, wanting to bring this huge opportunities in terms of financing gap within the real economy to make a community and really help you to work with you to scale up that real world adoption of DAI.
Great. Well, that's all the questions that I have. I just want to say thank you for coming on, and this is a really fascinating venture and opportunity that you're doing, and you know, I'm sure Maker will very much enjoy continuing to explore a partnership with you.
Thank you.
Thank you, and
Maria and Tim,
we do. Yeah.
Sorry, I wanted to mention, maybe you can comment a bit on the process, where we are, and what are the next steps, so that people watching this call can be more aware of it.
Sure. So we're now waiting for Maker to have the green light on us, and then from our understanding, the next step would be, from a Maker perspective, is to perform due diligence on us. But before that, we will launch our pool with Centrifuge already, hopefully some point in August. And that would allow Maker investors and the protocol also have a bit of a track record before your DD process is completed and the pool with Maker goes live.
Right. I think the green light poll is running right now. Maybe Pros or Pablo can confirm from the Governance Alpha team.
Sure.
Yep. Closes out on Monday, so you got a few more days to vote if you're seeing this and it's not yet.
So to those who are voting no's or abstain at this stage, even though it's very small, hopefully throughout this call we give you enough more information for you to make up your mind, and hopefully that's a yes.
Yeah, and I guess for a little bit of context, we basically
and
use
if anyone has sorry.
I was just going to say we use it for a little bit of like prioritization within our framework. So once we get those initial impressions, we say, oh, you know, the community really likes this, or they're not so sure, and we use that to try to inform how quickly we should do our DD and stuff. So yeah, look forward to continuing that afterwards.
And where is the green light poll?
I just posted a link in the chat. It's on our voting portal. If you click on polling there, it'll take you there, or you can just click the link directly.
Oh, okay. Thanks, Ben.
So Man Ray and team, if anyone wants to reach out to ask questions or make any comments or any further inquiries, where should they do that?
We have already, you can either do it in the Maker forum. We're looking to have some more interactions. So very happy to answer questions within the Maker forum. Or if you want, we have our email addresses all listed out in our MIP6 application. So whichever is easier for you.
Sounds great. All right, everyone. So yes, for anyone listening to this, the discussions as always happen at forum.makerdao.com. So please join us there. If you look there for Untangled, you will find the MIP6 application, and there you can reach out to the team, ask any questions, and as always, vote and participate in the governance process. That's quite important. Any parting words or anything that you would like to say?
Juan, I look forward to working with you on, and we've been tracking Maker. We know Maker, and we've been following Maker for a good 4 years now, and it's amazing what you've been able to achieve, and being fully decentralized as well. We're very looking forward to have some, and with your funding cost being zero, we see very big opportunity to help our originators to grow the real economy, and hence roll die out to the real world.
That is our superpower, yes. So
That's right.
But yeah, thanks everyone for joining. Have a nice weekend.
you.
Thank you very much, everyone.
Thanks, everyone.